What up guys, welcome back to the course on technical analysis on how to read the stock charts, which is the language of the stock market. And in this video, we're going to be talking about the Doji candlesticks. Now a Doji candlestick is formed when the candle opens and closes at the same price, resulting in a small or non-existent body. You see the line in the middle is called the body and the legs, they're called the wicks. And like you see on the neutral and the long-legged Doji, the candle opened at the middle and closed right at the middle. Ended up looking like a cross or a plus sign. Now the legs of the wicks and the shape of the doji can vary depending on what happens before the candle closes. And today we're going to be talking about 3 different shapes of doji candlesticks. We got the regular neutral long-legged doji, then we got the Gravestone Doji, and we got the Dragonfly Doji. And if you think this lesson is going to help you out, please hit the thumbs up button and subscribe to the channel. Thank you. Now what does a doji candlestick mean? By default, it communicates indecision, but it can be used as a powerful indicator for reversals. You can see the doji on the bottom. The candle opened, it moved up, it moved down, but it didn't know where to go. And it ended up closing at the same price it opened at, resulting in a doji, a candle of indecisiveness. The best way to put it is, think of it as a tug-of-war between the bulls and the bears, with neither side victorious. But the winner, however, is the next candle that crosses either of the doji's wicks. For example, if the next candle breaks the top wick of the doji, then the bulls win. Inversely, if the next candle breaks the bottom wick of the doji, then the bears win. And by the way, dojis do not work when the stock is trading sideways or during consolidation. They only work at the end of a run up or at the end of a run down. That's when traders wait for reversal signals, at the end of a run. Moving on. Here's an example of a bullish doji. Remember, a doji indicates a reversal. So at the end of a run down, we get a bullish doji. So basically this chart indicates that a reversal is about to happen. So the next candle that opens up and crosses the top wick of the doji is going to start the reversal and the bullish trend. So here's an example of a bullish doji. At the end of a run down, a doji is formed. The next candle that opens up and crosses the high of the doji is going to start the reversal back up. On the other hand, here's a bearish example. At the end of a run up, a doji is formed, which indicates the reversal, and the next candle that crosses the doji's low is the confirmation and starts the trend down. So going back to the board, this time we have a bearish doji. So the stock was going up. Then a doji is formed, and the next candle that made a new low and crossed the doji low started the reversal back down. But make sure you're also looking at the volume. The bigger the volume of the doji candlestick, the more reliable the reversal is going to be, and the bigger the spike or drop is going to be. And by the way, you should know that without high volume, there is no strategy that is going to work. None of the indicators, studies, or patterns are going to work without high volume. Volume is crucial for day trading, so only trade stocks with high volume. Moving on, here's another example of doji reversals. After a run down, the first doji is formed, which signals a reversal, and the next candle that made a new high started the bullish trend up. Then doji number 2 is formed, and the next candle that made a new low started the reversal and a pullback. Then doji number 3 is formed, which made the reversal back up. Now it's also important to look at which time frame you are using. This chart could have been the 1 minute, 5 minute, or the daily time frame. So if this was the 1 minute time frame, then we would have had a reversal every 5-10 minutes. And if this was the daily time frame, then we would have had a reversal every 1 to 2 weeks. Just keep that in mind. So let's move on to the different forms and variations of the doji candles. So we already know the long-legged doji, which is also the same as the neutral regular doji, indicates indecision, but they are not as valid as the Dragonfly Doji or the Gravestone Doji. For example, sometimes when you see a regular long-legged doji, the stock reverses just for a short period, then it continues back up to the same trend it was. Whereas if you see a Gravestone or a Dragonfly Doji, it's a clear reversal signal, much stronger and more valid than a regular doji. For example, if I was short, I took the stock short and I was riding the wave down, then I saw a Dragonfly Doji, That's a clear sign for me that the sellers are losing strength. You see, this was a red candle. Before it closed as a Dragonfly Doji, this was a red candle. It opened up as a red candle, it went back down, but it couldn't hold. The bears became weak, and it ended up closing as a Dragonfly Doji, which is a signal to get out of your short position or get in a long position on the next candle that crosses the Doji's high. Same thing with the Gravestone Doji. The Gravestone Doji is a clear bearish reversal signal. It's a huge red flag for bulls. It's almost a guaranteed reversal. If I was long and I see a Gravestone Doji, I will instantly get out without hesitation. It's a clear indicator that the buyers are losing strength or they lost the battle, and this is getting top heavy. For example, if the stock was going up, I was in a long position, I was holding, but now I see a Gravestone Doji, I would instantly get out of my long position. I would also be very comfortable shorting the stock on the next candle that makes a new low or crosses the Doji's low. I mean, it's in the name. Gravestone Doji means death. On the gravestone you see R.I.P. Death to the stock. It's gonna go down, get dumped. Now before I end this video, just keep in mind that a Doji's body is essentially non-existent. The candle opened and closed at the same price. But if you had a larger body, then that's a completely different candle. And we'll talk about this in a completely different video. This is a hammer and the inverted hammer, interpreted differently than the Doji candlesticks. Also, make sure you use the Doji in conjunction with other technical analysis tools, because during the reversal, the moving averages might act as a dynamic support or resistance. So it might hit those moving averages, then get back down. So, thank you guys for watching. Please make sure to like and subscribe for more videos. If you didn't like the video, you can leave a dislike if you like, it's up to you. If you have any questions or suggestions, leave them down below. I will respond to everything. Peace.